Today, we're taking a look at MTU Aero Engines, a really big name in the aerospace world that's, well, they're facing this huge headline-grabbing problem. And if you're an investor, the question is pretty simple, right? Is this a giant red flag telling you to run for the hills? Or is there maybe a hidden opportunity here that the market is just completely missing?
Because, that's really the big question we're digging into here. What if the very thing that's causing so much short-term pain for this German engine maker is actually setting them up for decades of profit down the road?
And this is the scale of that pain. 1 billion euros. That's roughly the size of the provision MTU had to set aside to deal with a massive engine issue. I mean, it's a number that just jumps off the page, it shook up investors, and yeah, it hit the stock pretty hard.
Okay, so let's get into it. What exactly is this billion-euro problem?
So the problem actually starts with their partner, Pratt Whitney, and their new geared turbofan engine, the GTF. Turns out there's a powder metal contamination issue, and that means a massive, super complex, and really expensive global recall is underway. Now here's where it hits home for MTU. They are an 18% risk and revenue sharing partner on this engine, so they share directly in the pain, and that translates to a huge hit on their books and a serious drain on their cash right now.
But to understand why this crisis might not be the total disaster it seems like, you first have to understand how MTU actually makes its money, and I'm willing to bet it's not how you think.
It all comes down to a classic business model, the razor and blades model, but for aerospace. So MTU helps sell the brand new engines, those are the razors, often at a really low margin, sometimes even at a loss. The goal isn't the profit from that first sale. The goal is to get a huge fleet of their engines on planes flying all over the world. Because the real money, the high-margin, super reliable profit, that comes from the decades-long stream of selling spare parts and maintenance services. Those are the blades.
And would you look at this? This chart just shows you the power of that model perfectly. Look at the revenue mix for 2024. A whopping 2/3 of the business comes from commercial MRO. That's maintenance, repair, and overhaul. So you see, the aftermarket blades aren't just part of the business. For MTU, they pretty much are the business. Okay, so this brings us to the core idea of this whole explainer. How that billion-euro problem is actually a catalyst, pushing MTU straight into its most profitable future, way ahead of schedule.
Now this slide here lays out what's so fascinating. It's a total paradox. On the left, you've got all that short-term pain we've been talking about. It's real, no doubt. But look at the right side. This crisis is forcing MTU to massively scale up its high-margin MRO business. It's basically fast-forwarding the development of the aftermarket for this critical engine. And in the process, they're building what is essentially a high-margin annuity stream that's going to pay out for decades.
And this right here is the key takeaway. It's the whole story in one sentence. Yeah, it's financially painful right now, but this recall has triggered a huge, early wave of engine repairs. It has literally pulled the most profitable part of this engine's entire life cycle forward by several years. MTU is being forced to build the higher margin business of tomorrow, today.
So, okay, let's see how this catalyst plays into management's long-term vision. How does all this translate into actual, credible numbers? Well, management has laid out a pretty ambitious target for 2030, somewhere between 13 and 14 billion euros in revenue. Now, to give you some perspective on that, that's a plan to nearly double the business from about 7.5 billion in 2024, and they want to do that in just 6 years.
And here's the kicker. This isn't just growth for the sake of getting bigger. They're also targeting an adjusted operating margin of around 15%. That proves this whole expansion is designed to be very, very profitable.
And this chart, this shows us exactly how they plan to get there. Just look at those bars. The aftermarket segments, spare parts and MRO, are projected to grow in the low to high teens every single year. That is way faster than new engine sales. This shift in the mix towards the high-margin blades is the engine driving that profit margin expansion we just talked about. But, that 2030 vision isn't even the end of the story. To make sure those blades keep selling for the next 50 years, MTU is also investing heavily to stay relevant for the next generation of flight. Their CLARE agenda is a roadmap for clean aviation. They're doing evolutionary stuff like making the GTF even more efficient, but also revolutionary concepts like the flying fuel cell for hydrogen power. And their partnership with Airbus on its Zero-E project, that's a massive vote of confidence that they're on the right track.
So for any investor, it really all comes down to this, doesn't it? What's the bottom line? Let's try to balance this really compelling opportunity against the very real risks that you absolutely have to keep an eye on.
Because no investment is a sure thing, right?
The big engine makers, the OEMs, like Pratt Whitney, they're MTU's partners, but they're also competitors in the MRO space. It creates this frenemy situation that could squeeze profit margins. Then there's just huge execution risk. Doubling your MRO business by 2030 is a monumental task. The cash drain from the GTF issue could last longer or be worse than they think. And of course, the whole industry depends on a healthy global economy and people wanting to fly.
So, if you're tracking this story, here's your dashboard. These are the things to watch. First, free cash flow. Is it recovering and heading back towards management's target? Second, spare parts growth. Keep an eye on that. Third, watch the MRO mix. Is the share of that next-gen GTF work going up like it's supposed to? And finally, the ultimate measure of whether this is all working. When does their return on invested capital get and stay above their cost of capital?
Which brings us all the way back to our final question. Is the market, with its laser focus on the billion-euro provision and the near-term cash burn, just getting lost in the current turbulence? And if it is it overlooking a much, much clearer sky ahead for MTU Aero Engines? Well, that's the billion-dollar question for investors to decide.